India's second largest IT exporter, Infosys, just reported its Q1 fiscal year 26 earnings. Yes, the numbers were solid, but the real story? Well, let's go ahead and find out. Enterprise AI is now central to its strategy. Productivity gains are showing up in the bottom line, and despite that, margins continue to feel the heat. So let's go ahead and figure out how the entire year panned out. Net profit 6,921 crore rupees, up 9%. Year-on-year revenue 42,279 crore rupees, up 8%. Constant currency growth 3.8% year-on-year, 2.6% quarter-on-quarter. Large deals 3.8 billion, 55% of which are net new free. Cash flow $884 million. Conversions, well, above 100%. So this is what they had to say. We have built over 300 AI agents deployed across client operations, driving decisions, efficiency, and customer experience. Salil Parekh, CEO, Infosys, these aren't prototypes. These agents are live, enterprise grade, and delivering productivity gains between 5% to 15%, especially in supply chains, customer support, and back-end operations. Infosys calls this enterprise AI in action. And while clients are cautious with discretionary spends, AI-led consolidation is giving Infosys a competitive edge. Over half of its top 20 BFSI clients have now chosen Infosys as their AI transformation partner. Financial services led the sectoral growth at 5.6% year-on-year in constant currency, followed by manufacturing, which is at about 12.2% positive. But not everything actually clicked. Retail barely moved at 0.4%. Life sciences and others declined sharply, down 7.9% and 15.3% respectively. Now, about that particular margin that we talked about, here it is. Operating margin fell to 20.8%, down 30 basis points year-on-year. The question is why? Well, price hikes in April, higher variable pay currency, headwinds offset in part by pricing improvements, internal efficiencies from Project Maximus, lower third-party costs. Project Maximus continues to deliver, helping Infosys balance wage hikes while still generating pricing-led margin tailwinds. But fixed costs from low growth and ramp-up transitions in large deals are weighing in on the base. On headcount, well, on that particular front, this is how it unpacked. Total employees 3,23,788. That is flat, quarter on quarter. Utilization and peak 85%. Attrition went up slightly, 14.4% versus 14.1% last quarter. So basically, Infosys managed to clock volume and revenue growth without adding headcount. That is a very clear sign of internal productivity leverage. But any future ramp will now need hiring. So what is actually going to be the hiring outlook? No slowdown is planned. Lateral and campus recruitment continues as per the original plan. And yes, Infosys has made no changes to its bench or lateral onboarding policy, even as industry peers tighten theirs. Geographically, well, Europe continues to outperform, a result of strategic investments made years ago. As far as North America is concerned, that remains stable, but with clients still cautious in sectors like logistics and auto. The full year revenue guidance has been revised, but only very slightly. Raised lower end to 1% from 0%, kept upper end at 3%. So basically, Infosys isn't calling it a comeback just yet. But with strong deal momentum and enterprise AI traction, it's actually very clear that the company is shifting gears. Enterprise AI is not a buzzword for us. It's actually delivering outcomes today. We are in it for the long game. So basically, let us know what you think in the comments below. This is Front Page by AIM TV. Like, share, subscribe. And always remember, well, Cypher 2025 in its 9th edition is going to dazzle you with its AI magic because it is India's biggest AI summit and expo. It kicks off on the 17th of September right through till the 19th of September at KTPO Whitefield, Bengaluru. Be there because you are going to go ahead and find out what is happening in the world of AI and tech up front and close. Well, think AI, think AIM.